Hello and good morning, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today I'll be joined by Emmanuel Boto from Uganda, Kampala. He's our education partner. So the main topic for the day, as the title of the video suggests, is a deep dive into the gold rally. So on top of these, we'll also be looking at the top market events that are expected to be moving things this week as well as today. So we also do some technical analysis on major pairs. We'll try to understand what's the key trends in major indices as well as commodities. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So as usual, I would like to begin with a disclaimer. This session is not investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So I'll be starting with an article I prepared this morning, and this is a deep dive on gold. And as you can see, the main title of the article is The Great Gold Repricing, with a focus on currency wars, tariffs, and institutional FOMO, FOMO being fear of missing out. So as of today, gold is up 4.5% this week, and it's only Tuesday morning. It's also up 32.7% since the year started, and we're only in April, which is the fourth month of the year, which suggests that there is likely more room for the rally to continue. So far, gold is still the best performing asset since the year started. So if you look at the performance of gold, just give me a sec. Just want to show you something here from Finviz. So clearly, as you can see from this particular comparison of futures markets, so the best performing asset is, of course, the volatility index, which is basically a measure of the SP 500 volatility. It's not a commodity like the other items on the list. And as you can see, among all these commodities, the one with the biggest gain since the year started is gold, clearly indicating 29.3. But if you look at your spot gold charts, we are up over 32% since the year started. So second in line is soybean, which is up 19%, copper 16%, coffee 16%. The Swiss franc is up 10% against the dollar. The Japanese yen is up 10% against the dollar, and the euro is up 10% against the dollar. And also silver is also closely tracking the currencies, up 10% against the dollar. So clearly gold is the key winner in Q1 in the first month of the year. So in the first month of the second quarter. So our key focus for the day will be on gold, try to understand why it's running and how we can take advantage of this. So the first question we'll be asking is what has been driving this rally? So I'll start with the first point. The US dollar index has depreciated by 9% year to date, made as a hedge against currency risk. So remember, if the US dollar is down 9%, US, if they are looking to make profits from their investment, they would have to repatriate their profits back to their local currencies. And in that case, they would take a forex hit of 9%, meaning that if you made your investment at the beginning of the year, let's say on 1st January, today your investment is down by 9% in dollar terms, since the dollar has lost about 9% against other currencies. So in this case, it has made gold a more desirable asset to hold compared to the US dollar, as well as US dollar investments, which have also been going down. So if you look at bond prices, they have been going down, while yields have been going up. If you look at US equities, they have also been going down. So clearly, this has made gold a very good asset to act as a safe haven. That is, in these times of uncertainty, especially caused by Trump's tariffs. So the number two reason why we have seen a strong rally in gold is that institutional investors are increasingly favoring gold, with about 42% of fund managers identifying it as their top asset choice in April 2025. So this is according to Bank of America's April 2025 Gold Fund Manager Survey. So gold ETFs have seen substantial inflows, reflecting a strategic pivot towards safer investments and market volatility. So the third point is about China. We know China has been a big buyer of gold, and of course, they have been driving gold demand, of course, increasing prices. So People's Bank of China has accelerated gold demand. The People's Bank of China increased gold reserves for 17 consecutive months, with each month averaging 5 to 10 tons, which increased China's gold reserves from a mere 3% to about 8% of their total national reserves. So China buying gold has been a key driver. And of course, when you see the People's Bank of China buying gold, other central banks have been following suit. And with this being a key global trend, then we have seen gold accelerating over the last 3 years. So number four, here we are looking at yet another angle in China. So in this case, it's not the government, but the private sector. So if you've been following the Chinese economy closely, you must have seen the country garden collapsing and failing to honor their corporate bonds. We also saw Evergrande being the first and the biggest real estate company in China to collapse. And this saw their stock tanking 80-90%, and it drove the entire property sector in China into a recession. So after the recession in China's property sector, China's private sector pivoted to gold, meaning that a lot of investors who were willing and putting more money in real estate, they saw the weaknesses and started looking for alternatives. And in this case, they started buying gold. So in 2024, the private sector demand surged by 24.5% year on year, reaching 373.13 metric tons, the highest annual total since the year 2013. So Chinese gold ETFs attracted approximately 31 billion yuan or $4.24 billion in inflows, marking the strongest year on record. Total assets under management soared by 150%, reaching 71 billion yuan. So clearly, the Chinese private sector has also been a key driver of the current rally in gold, meaning that a lot of Chinese investors and individuals are buying more into gold ETFs. So this has created a very strong demand for gold, and as a result, we have seen gold hitting new all-time highs. So the number five reason, and they're not ordered in weight, so it doesn't mean that number one is stronger than number two or in any form of order. I just listed them. So flight to safety has been a key concern in the global markets. So we know that a majority of the global investors are invested in the US market. So global investors are de-risking in response to Trump's tariff threats and broader market volatility. So whenever you see more developments in tariffs, especially what happened on April 2, when the US implemented tariffs on the whole world at a minimum of 10%, with other tariffs such as China moving up to 200%, and other economies getting 25% tariffs on all auto imports, 25% on steel and aluminum imports. So all these leading to a lot of uncertainty in the market. So this has led to increased volatility, and that's why we have seen the volatility index being the one that has gained the most since the year started. So after Trump was inaugurated, that was on the 20th of January, the SP 500, the NASDAQ, and the Dow Jones have all entered correction territory, meaning that they are down more than 10%. And in some days between April 2 and today, we have seen the SP 500, the NASDAQ, and the Dow Jones enter crash territory, meaning that they at those moments they were down over 20%. So, for instance, yesterday the Nasdaq officially entered stock market crash territory, having dropped by 20% from its most recent high. So the DXY is down over 9% year to date, and emerging markets have seen massive outflows due to tariffs. So this has set up gold and Bitcoin as favorite safe havens. And we can already see these in play since a majority of these other assets that are considered to be risk assets have already been moving downwards. So reason number 6 is the US bond market, which is a key indicator and driver of global market sentiment. So the US bond markets has seen massive outflows with nation states, hedge funds, banks, and individuals reducing their holdings due to risk of rising inflation from Trump's tariffs and foreign investor fright. So this has accelerated the US 10-year bond yields to, as of this morning, 4.432%, while prices have gone down. This uncertainty has led to increased gold demand. So remember, when investors are buying gold, they are always trying to compare these with the most stable bonds in the world, which is American bonds. So when they consider whether they are going to put money in US bonds or whether they are going to put money uh, in gold, they will try to understand the key differences. And one of them is that bonds tend to give yield every year. So in this case, if you're getting, let's say, 4.432%, it seems like a good return. But when you consider the real return, which is the real yield, implies the yield minus inflation. So with US inflation being around 2.8%, then you know that you're getting less than 2% return in a year. So when you compare the opportunity of investing in gold, where you could be up over 30% since the year started, then a lot of investors consider gold compared to the bonds in the US. So then the next part is the current war, and this is not so significant, but it might be significant in the near future. And this is a tug of war between US President Donald Trump and the Fed Chair Jerome Powell. So President Trump's public criticism of Fed Chair Jerome Powell and calls for immediate interest rate cuts have raised alarms about the Fed's independence. So Jerome Powell has not yielded to Trump since Trump started saying that he should cut rates immediately. Mostly he has been holding rates steady. So for Jerome Powell, who reads a very independent institution, he has basically said that for him, he will continue obeying his constitutional mandate of basically stabilizing prices and trying to achieve the goal of full employment in the US economy. So as of the most recent update in US inflation, we have seen inflation moving sustainably towards the 2% target. But then Fed chair, from his recent speech, has said that he is willing to wait it a little bit longer to get more data and more confidence that inflation is getting back to 2% before cutting rates further. So in so doing, we have seen the market pricing in an interest rate pause as of the next meeting. And the next meeting should be happening in 2 weeks, or basically 15 days from today. So I'm trying to reload this page so you can get the probabilities. Can you give me a sec? So clearly, the next FOMC meeting will be in 15 days. For those who are new to the CME for FedWatch tool, it basically answers a very simple question. What is the likelihood that the Fed will change federal target rate at upcoming FOMC meetings according to the interest rate traders? So use the CME for FedWatch tool to track the probabilities of changes to the Fed rate as implied by the 30-day Fed funds futures prices. So this tool is usually very accurate in trying to project the next. We know that there is a 90.9% probability that the Fed will hold interest rates steady at the current rate range of between 4.25% and 4.50%, with a small 9.1% possibility that the Fed will be cutting rates by 25 basis points to between 4% and 4.25%. So clearly the market doesn't believe Trump, and the market is siding with Jerome Powell, hoping that things continue as is. So what could stop this trend? What could stop the current strong rally in gold? So one of the key things that would immediately change the current rally in gold is, one, if Trump concedes and goes easy on tariffs. So if Trump decides to remove the tariffs on China and the rest of the world, this would instantly shift sentiment in the market, although it's highly unlikely this month, since Trump has been very insistent that the tariffs will continue. So investors could shift to risk on and start accumulating equities at discounted prices. This would lead to a quick market recovery. So two, a rally in real yields. And real yields are basically the bond yields minus inflation. When bond yields rise, especially on risk-free US treasuries, they offer a compelling alternative to holding gold, which doesn't have yield nor dividends. So in this case, if we saw a very strong, aggressive rally in bond yields in the US, then we could be seeing a lot more investors selling their gold and getting back into bonds. So this would present an opportunity, especially for institutional investors, to lock in good returns. So also, we haven't seen this happening. And the last point here is a Fed rate cut. So if Jerome Powell yields to Trump's pressure and decides to cut rates aggressively, let's say a 50 or 75 basis point rate cut, then in this case, it would basically show that there is a good opportunity for stocks to perform in the US. And in this case, we could be seeing investors shifting back to stocks. So while rate cuts typically support gold, they are not bad for gold. A full rate cut cycle tied to an economic soft landing could push investors back into equities and bonds. As long as Jerome Powell sticks with his rationale of holding rates higher for longer, until inflation slows reasonably, we should expect gold prices to remain elevated. And that's the end of the article I was covering today. So I'll be showing you a couple of more updates before we move on to the next part. So this one is from the World Gold Council. So China's gold market update, investment boom continues in March. That is as of last month. So March was another exceptional month for gold. The Shanghai benchmark gold price PM and the LBMA gold price PM surged by 8.4% and 9.9% respectively, both concluding Q1 with performances unprecedented in decades. So gold withdrawals from the Shanghai exchange rebounded following the holiday slowdown in February. These combined with strong investment likely boosted gold, local gold price premium in March. However, Q1 wholesale gold demand fell 36% year over year amid January and February weakness. Chinese gold ETFs attracted 6 billion yuan or $772 million in March, pushing total assets under management to $14 billion and holdings to 7.7 trillion yuan, higher to 1.138 trillion. Q1 inflows reached a record high. The People's Bank of China has been adding gold to its reserves for 5 consecutive months, and March saw a 2.8 trillion reported addition to China's official gold holdings, and Q1 ended with a net gain of 12.8 trillion. So gold imports during the first 2 months of 2025 were tepid on weak demand and local price discounts during the period. So another article, in this case from the goldbroker.com, basically highlights some key developments. China's central bank purchases gold for the 17th consecutive month. So in this case, you can see the continued demand for gold, and now we are moving into 1.5 years where China has been just buying gold month over month and increasing its reserves. So clearly, with this kind of demand, we expect this particular trend to continue. So one specific chart I wanted us to see, it's right here. So this is the assets under management of Chinese gold ETFs, which continue to grow. In this case, you can see the level in terms of tons from 0 to 160 metric tons. And in this other chart, you can see it in billions from 0 to 120 billion yuan. So clearly, as of the start of the year, if you look at the yellow or the gold line, you can see that at the beginning of 2024, we were looking at around 50 billion worth of assets under management. And now we are looking at an increase all the way to 150. So this is a big growth of over 150% in gold holdings. And then for assets under management, it's also following the same trend, meaning that there has been a very strong acceleration of private sector gold demand in China. And as a result, we have seen this continued growth happening. So clearly, we should be expecting to see more outperformance in gold as we continue in the second quarter of this year. So one more update. In this case, our stock market today, Dow SP 500, Nasdaq futures climb as Trump escalates tensions with the Fed. So US stock futures edge slightly up following a bruising day on Wall Street, marked by renewed criticism of Federal Reserve Chair Jerome Powell by President Trump. So clearly, this war is becoming quite a significant factor when you are considering your investment decisions. So Asian markets edged down, shaken by US sell-off, and then just trying to move a bit faster here. So gold reaches new record as trade war pushes heaven demand. Then big tech earnings could reveal if stocks are washed out or they have more room to fall. So remember, from the earnings side, 20% of the SP 500 companies are set to be reporting earnings this week. So it's a big week on the earnings side. And of course, is expected to increase volatility in US equities. And of course, if they happen to miss their targets, then it would be a key driver in gold higher. So this is the one chart I was looking for. So Magnificent Seven stocks are a long way from recent highs. So since Trump became president, his policies have only driven the biggest tech stocks in the US lower, with the biggest company, which is Microsoft, having gone down by 23.32% year to date. Apple is down 25.74% year to date. And then Google 28.68%. So sorry, these are not year to date. It's the price decrease from the most recent high. So Google is down 28.68%, Amazon 31%, Meta or Facebook down 34.59%, Nvidia is down 36.71%, and the biggest loser in the Magnificent Seven stocks has been Tesla, which is down 53.43%. So while on one side, this is discouraging investors from investing in equities, and a lot of investors have been putting their money in gold instead, therefore driving gold into new all-time highs. These uncertainty between Trump and Jerome Powell, and of course the tariffs happening around the world, and the main trade war between US and China is basically leading to an indecisive market where a lot of investors are risk off. They are not interested in buying stocks with this kind of volatility. So when we have some negotiations and we get to the end of these tariffs, then at that point we should be seeing investors rotating back into stocks because these stocks are considered to be very cheap. So this basically means that if you bought these stocks, you'd be getting a really good discount. For instance, with Tesla, if you bought Tesla today at $227 per share, it's a 53.43% discount compared to a few weeks ago. So in this case, it gives you a very great entry point. So while there's still risk and uncertainty, investors are really considering entering at these low prices. So at some point when we see a reprieve or maybe some form of deal between US and China, the stock market is expected to make a very strong rebound from the current levels. But as of the deadlock that is continuing today, good chance that we won't be seeing that this month, and that means a continued rally in gold. So I'm looking at one more update. So explainer on what's known whether Trump can fire Powell from the Fed. So Donald Trump on Monday kept up his verbal assault on Fed Chair Jerome Powell over the Fed's refusal for now to further cut interest rates, rattling financial markets growing ever more fearful that Trump may ultimately try to fire the US central bank chief over the matter. So can Trump really fire Powell? Whether Trump has the authority to do so is unclear. So the Federal Reserve Act of 1913, trying to share this. The Federal Reserve Act of 1913, establishing the Fed, stipulates that members of its board of governors appointed by the president and confirmed by the Senate to staggered 14-year terms can only be removed for cause long thought to mean misconduct, not policy disagreement. That said, the law omits reference to limits on removal from its description of the 4-year term of the Fed chair, who is one of the 7 governors. So would this be uncharted territory? There is no direct legal precedent since no president has ever tried to fire a Fed chief. There are, however, lawsuits now working underway through the court over unrelated firings by Trump, being watched as possible proxies for whether he has that power. So one is currently pending before the Supreme Court, where any attempt to fire Powell would almost certainly end up in the Supreme Court. So what would firing Powell mean in practical terms? A lot would hinge on how Trump might choose to fire the Fed chief. So as each of the each of his predecessors has done, Powell holds three roles: chair of the Federal Reserve System, member of the Board of Governors, and chair of the Fed's interest rate setting Federal Open Market Committee. So can Trump oust him just as Fed chair? Were Trump to try to remove Powell as the chair of the Fed system, Powell would remain governor until that term expires at the end of January 2028. The next scheduled board vacancy does not occur until January 2026, which in the meantime would leave Trump only the option of nominating one of the other incumbent governors to be chair. Two of those other six were appointed by Trump in his first term, Governors Christopher Waller and Michelle Bowman, whom Trump recently nominated as vice chair for bank oversight. Both, like Powell, have spoken about the importance of the Fed independence, so it's not clear that either immediately would deliver the rate cuts that Trump wants. So clearly, it's a big deadlock, and Trump is having difficulty in influencing the current Fed policy. So that being said, now I'll be jumping into some technical analysis. I'll only cover one chart, and in this case, I'll be covering the chart of gold. And once we cover that, hopefully, everyone will understand the premise of gold and how it has performed since the year started. So clearly, this is where gold started at the beginning of the year, and this was the opening price. So we literally started the year with gold at around 26.24, and the highest price we have seen is 34.99, very close to 3,500. So from the open of the year to the high of the year, this has been a 33.15% gain, with most of the gains happening this month, where gold has clearly accelerated. You can see the big green candlesticks on the daily. So on the 4-hour chart, we saw a pullback about 3 weeks ago. This was the week of the first week of April, where gold pulled back and bottomed at around 29.56 before eventually breaking the previous high and moving into a new high of around 32.44. So there was a slight pullback to 31.93 before making a rally all the way to 33.58. And then after 33.58, which was last week, we had a pullback to 32.83. And then this week, a very strong rally to 34.99. And now it seems like we are getting a nice pullback from the current strong rally that we saw this morning. So clearly, if you want to use the 1-hour chart and you try to understand the sell-off that we saw happening on Friday last week, from the most recent high to a low, this was a drop of 7,201 points, or basically 720 pips. So if you compare with what's happening today, 720 pips would be, let's see, 720 would largely coincide with the highest price that we saw on on Monday, which was yesterday, almost mixing it up with Easter. So the highest price that we saw yesterday could be significant since it's similar with what happened here. So the market pulled back here by 720 pips and then continued higher. Notice from this bottom here, we had a strong rally here. And if we measure the number of pips from here, this was a pretty strong rally of 21,588 points, or 2,158 pips. So this happened within the span of 2 days, and now we are getting our eventual pullback playing out. So in this case, if you enjoy trading pullbacks, then in this case, if last week's pullback is anything to go by, then the expectation is that the correction in a gold price drops to around 34.29. And once we get to 34.29, then potentially we could be seeing a rally shaping up from that price action area. So from the 1-hour time frame, you can see it's a big pullback from the 15 minutes. It's pretty easy to identify. So as of this morning, we are seeing gold forming a pullback after hitting a new all-time high of 34.99. So after the pullback, remember the trend is still pretty strong. So if you are going for a short selling position, you should trade it with a very tight stops. But then once you get the pullback, the idea is to look for signs of buyers entering the market and then look for bullish positions. And this would allow you to trade in the direction of the trend. So in this case, if I do a clean chart on the daily, then it's pretty easy to observe that today is a pretty green day, and we are getting a pretty good pullback here. Notice the long green wick on the upper side. Of course, we should be expecting to see more demand for gold. So in this case, after the pullback, the idea is to be looking for some price action territory around Monday's high. So the highest price that we saw on Monday was around 34.29. So clearly just a pullback to around this area here. And then we start looking for bullish positions from this area here. So that being said, I believe that ends my presentation for the day. So welcome, Emmanuel. Kindly take us through the rest of the technical analysis. And good morning and shout out to Miruka for being the first person to join and comment, as well as Paul Carey on YouTube. Thank you. Hi, Emmanuel.
Hello, Rufus. Thank you very much for the insights, especially from that fundamental perspective. So it's very crucial for gold traders to know what's happening in the fundamental markets, especially right now. The macroeconomic space is very, very volatile and it's very critical to gold traders. So on my side, I just want to. Can you see my screen?
No, not yet. Let's see. Try sharing again.
Let me just share this. Share window.
Yes, I can see it now.
Oh, sorry. Let me just reshare it shortly. All right, yeah. So that being said, I'm going to just give us a quick overview starting with the dollar index. And as we can see, we have been in a very, very bearish move coming from our daily time frame. We have had all this price action ever since probably about Feb, March. Actually, since the year began, we have seen this downward move on the DXY, and we did see our price break below this support level. We had a small retest and showing the possibilities of continuing to the downside, and looks like it's in free fall from the DXY perspective. And coming from what Rufus had just shared from us at the start of the presentation on how investors are coming in not to shorting the bonds and putting their money more into gold, basically because the yield doesn't look lucrative for them at the moment. So you can expect to see this move continue to the downside on the DXY. Of course, you can expect a retracement. If we break above this level, we can look at the DXY coming all the way up to the next resistance. That could be this. That aligns with our gap down that we had when the market opened. That was from Thursday last week, going into the Easter celebrations. So you can see these levels here. You can see if this area holds price, we can look for those sales to the downside. Price has created a level over here that shall have to break to confirm a continuation of the bearish moves. So you can see something of this nature here, the downside. Rather still, the best possible move would be for price to come to these extreme levels in terms of retracement, then push to the downside on the DXY. Now, after having looked at the DXY, we all know that when the DXY is buying, you can expect some good retracements or some good strength on the dollar pair. And as you've seen, the gold currently is showing you some kind of strength on the dollar, but it's not advisable to actually correlate the DXY with gold. On the other hand, we can look at GPJPY. So during times when gold is having a lot of uncertainties, we can always look at the JPY indexes. They seem to be a little bit more stable in most cases. And as we can see, we did have a big push to the downside that found a kind of like a strong resistance at the bottom over here. And we have we rejected it, and price has been trying to give us a correction move to the upside. But as far as intraday opportunities are concerned, we can still look to price in some sells on the JPY pairs. I'm looking at this key level to see if it can come and give me some kinds of confirmations to continue and push, probably break below this low. On the other hand, we still find a strong resistance on a lower time frame, this being the 1 hour. We have seen this level that has been a very, very strong level, and price has had a very big difficulty breaking below it. So if worst case scenario comes in and we see the pound being strong, we do have Governor Bailey coming in to speak. I believe it should be tomorrow. So we can just see that pound showing some kind of uncertainty, but we'd want to see some strength on the JPY index to be able to price in those moves to the downside as we wait for Governor Bailey to come in tomorrow and probably give us a rate decision as well. So that's what I'm looking at on JPY. We can look at this level here. As far as intraday is concerned, if we're able to see good confirmations for the sell, or if the momentum comes in a correction way, we can be able to see the JPY remain strong. And my strength on the JPY comes from the JPY basket. We did have this bullish move coming to this side into this kind of order block that you can see over here. We did have these bulls coming in on the JPY index, and it hasn't quite reached this order block, so I would look for it to later on come into this order block. And currently we are seeing a retracement. So usually I use the JPY index to determine a direction on pairs like JPY in terms of the JPY side, Euro JPY, NZD JPY, and Odd JPY as well. So you can see it coming back into these key levels. Then probably are giving us we see some buyers coming to continue this bullish move on the Japanese yen as well. So if this bullish move happens to be priced in, that will be able to align with our JPY coming to push to the downside as well. So when the JPY basket pushes to the upside, we can see Japanese yen strength. That means pairs like JPY, Euro JPY, NZD JPY, CHF JPY will be able to give us some opportunities on the sell-off. So these are some of the key levels I'm looking at on JPY as well. But when price breaks above this level, I want it to come and break above the resistance that's up over this side, because we have seen it has been a very strong resistance level. And yeah, I want to be looking for bulls above this level. Take me on to the next daily zone. That will be all the way up here. From an entirely technical perspective as well. On the other hand, we have been able to see a rally on Bitcoin, and we just saw Rufus in the presentation he gave us. He explained to us why our investors are looking to run to Bitcoin as well, and we have been able to see that mid-month we're able to see this reversal coming on Bitcoin from this kind of level where the good breakout level here on the weekly time frame. That was almost a resistance level where price able to retrace, give us this turn on a weekly time frame, and we have been seeing those bulls coming in on Bitcoin because they are an investor preference as well. So coming on the daily time frame, we do see that we did break above the trend line that we're having over here. We're able to clearly break above it, and then the resistance level that price has been trying to form here, we have currently been able to break above it, so you can still be pretty bullish on a Bitcoin. Coming to the 1 hour time frame, I've been anticipating this retracement, as you can see, probably to these key levels here, whereby I can hope to see some buyers come into the market and possibly take that decision. Any break below this level will signal a deeper retracement that will come onto the next key level, the next demand level, that will be all the way down here. So unless you're very conversant with trading retracements or trading against the predominant trend at the moment, you can look for those opportunities, but I wouldn't advise on that. The trend should definitely be your best friend and should look for all possible means of aligning with the trend at all possible scenarios. So you can look at this on Bitcoin to try and continue with this bullish move, these two key levels. Coming down into one more currency pair, let's just look at GBP as well. So coming from a daily time frame, GPNZD, we have been able to see that we had a rally that was coming up for quite a period of time. This from the last quarter last year, we have been having this rally that has been coming in. Now, price has currently attempted to break this trend line, as you can see over there, because we did see this sell down with a lot of momentum, but I'm expecting it to sell all the way to this key level that I've marked out in these purple lines. That's my next area of interest that I would really love to look for buys. to try and see if we can hold this trend to the upside in terms of GBP and ZD. Coming on to lower time frames, when we look at the daily, the 1 hour time frame, sorry, when we look at the 1 hour time frame, we did have this kind of supply level over here that came in from from this kind of consolidation that we had. So if you look at things like the Wyckoff schematics, all the accumulation, manipulation, and distribution are theories from ICT and of course pure technical analysis, we know that a price can as well break out from a consolidation, then give us this move into the inside, then give us an impulsive move, right? So we can see one of two things. We can see price get into this demand level here. That can be able to push price onto this level, back to this that can be able to push price onto this supply level over here. That will inversely hopefully give us some confirmations for sellers that can give us that move into the daily area of liquidity that I'm focused on at the moment, based on structure entirely. So we can look at that happening that way on GBP and ZD as well. On the other hand, when you look at the correlating pair, that would be Euro NZD. You'll notice that Euro NZD will look like it has exhausted its areas of liquidity, where we can see buyers coming in, because similarly, it has been a very big move. We saw this big impulsive move. Then we have seen this retracement on the daily time frame, and they're trying to get into this area of liquidity, or you could call it a demand. Now, one of the things you will notice about correlating pairs like this, when one pair gets to a demand level or a supply level before the other, for the pairs that correlate, Euro NZD and GBP NZD, Euro CAD and GBP CAD, the second pair will tend to give us a consolidation within those areas of liquidity. So on lower time frames on Euro NZD, I would expect us to see some sell-off within today or tomorrow into this particular demand zone, where we can see it pricing in proper buys to probably continue the trend to the upside in terms of the higher time frames. The higher time frame liquidity should always be our main goal, and we're focusing on the daily time frame to try and get those big moves that can possibly push price and give us some good risk to reward ratios as well. That's from the currency pair. So let's look at some kinds of let's look at indices, starting with the US 100, or you could call it Nasdaq. So this is a very crucial week for Wall Street, and in terms of tech as well. We have Tesla coming in with earnings, and Rufus has just hinted that on the major stocks, the Magnificent Seven, Tesla has been the worst performing. Of course, we have seen a lot of backlash that Elon Musk has been facing ever since the Doge went into action, and it has really affected the stock on Tesla. And conversely, of course, the tariffs have largely affected tech stocks, though Trump has been able to set back a little bit on some of the tariffs on some major moves. So you could see that coming in from I think last week, but on the 9th, we did see this big rally to the upside on US 100. Just to get a daily perspective, we did see that push to the downside. Then we have seen this move that came up to the demand level on the daily time frame, and we have been able to try and see some kind of retracement. But based on the nature of structure that it's forming, it shows it's kind of like a correction move, and we happen to do have some kind of like demand level below here that price was able to come to. Now, coming on the 1 hour time frame, that big daily candle we saw was a very big impulsive move that we saw over there. It's a very big impulsive move, and we can see here we did have a support level here where its consolidation was, break below, then break above, and we have seen this retest. So now for this retest to be able to hold price so that we can continue some good bulls on US 100, we probably want to see probably a 4 hour breakout to the upside that we don't happen to be seeing anytime soon. So based on the Tesla earnings, I'd expect to see a deeper retracement on US 100 on Nasdaq, probably to this demand level here, and we'll look at a 4 hour zone to be able to anchor that kind of sell-off to that level there. We have a big support and resistance level here towards a support turns to resistance, so we can be able to see some kind of confirmations, some kinds of sellers coming within these zones. They can be able to push it to this level over here on the 1 hour time frame, where you can possibly be able to look for some good buys on US 100 on Nasdaq. But we'd want to entirely be looking at what are the Nasdaq earnings. We have big tech guys coming in this week. I think we have Alphabet coming in with Q1 earnings as well. Yeah, basically there are about 4 big ones. IBM as well is coming in with some. AMD is coming in with some earnings. I think an IBM as well. So in the tech space, it will be a very busy week as well On the other hand, Trump will also be very busy working on his tariff policies that have been able to affect the stock markets very heavily. And some of the very big major tech earners, including Nvidia, have been able to take a hit. So we shall be watching on that on Nasdaq as well. Then the US 30 has a similar structure when you look at it to Nasdaq, basically because the stock markets have been affected in a similar way when it comes to that Trump's tariff policies as well. So I've been able to see that big sell-off that has been coming in on Nasdaq. On the daily time frame, you can see how long it has been lasting. Then we saw his correction coming. As we all know that Trump was able to cut back on some major industries that affect both Nasdaq and US 30. But you can see that for US 30, it has been able to come to this demand zone that can possibly be able to push price to this level over here. Coming on a low time frame, I'll be looking at price has been able to come into this level as well. So in the New York session, I'll expect some retracement to possibly one of these two fresh demand levels we can see over here, from which I'll be able to look for a confirmation, preferably on the 15 or the 5-minute time frame, that can be able to support some push to the upside, as we can see it from there. So I'll be looking at on our US 30 particularly. Then just a quick look on the Euro stock. Let's look at the Euro stock particularly, I think on German 40. Then we shall call it a day. So the Euro stock has been having this push to the downside. So we can look at the most recent sentiment. It was bearish. Then we are seeing this correction move to the upside. And when you look at your fib retracement levels from this supply level over here, we can see it approaching what they call the optimum trade levels or the OTE level. So I would like to see this push come either to this level here. If you don't see a confirmation in the OTE levels, we do happen to see a gap down within here. So this gap down can act as a key level for you if you want to take confirmations within the optimum levels or what they call the golden zones. Rather still, you can be able to wait and looking for those sales within this supply level over there. So that being said, on the higher time frame, we can expect some good correction moves to the upside. That if we go the lower time frame, we can price in based on just some major key supply and demand levels. So you can see price is currently buying off this demand level over here, and if we be able to see break above these resistance levels, we can hope for a retracement down, and then we can start push to the upside towards those levels that we're looking at. If we see a good break above this particular resistance level from the 1 hour time frame, we can look at that as well. So still within Europe, we can look at the German 40 index, and when you look at the higher time frame perspective, we still did have the same sell-off coming in for a longer period of time, but you're able to see this correction coming in, and we can say as of today, the momentum looks to be pretty bullish as well. So if you're looking for intraday opportunities on our German 40, we have been able to see a breakout of this level here. So that supply level was broken above and then retested, and you're seeing price continuing to push to the upside. So you can expect a retracement from these levels over here. We can see some kinds of retracement from these particular levels that can push us just as a slightly back into this, and you can see that correction move continue to the upside as the German 40 pair is looking to correct on a higher time frame as well. So ideally what we would look at, so as of gold, Rufus has just looked at gold and he has given his perspective on why we should remain bullish on it, though we are seeing a very good correction coming in, and he has been able to compare it to our last week's correction that you can look at. On just last but not least, we can look at US oil that we have been seeing that has been in some kind of free fall. This area of markdown over here, it has been in a very bad fall, and we have seen it create lows of up to $55 per barrel. So now we can look at this correction move that's happening, and we can look at this correction to possibly be able to sustain probably up to this supply level, or worst case scenario, we did have a strong support level that became resistance over here. So you can see this correction move come to one of these two levels here as well. If you feel more comfortable using the fib 2 levels as well, you can be able to look for the areas that align, and you can see that this resistance is not so far from our goal level or our optimum levels as well. So you can be able to look in for some retracements, for some sales within that area there. If you feel more comfortable waiting for the apex, if price gets to reach that level, over at least the OTE levels, we can be able to look at this supply level as our next possible selling area. Coming down to the lower time frame, we can see that we did have this move. Price did able to come and shift from here, gave us this rally we have seen over here, and then a retracement as well. So what we have seen right now is a good break on market structure as well that can easily be able to align with our structure. So you can look at this retracement, push down to the next demand level. That on a lower time frame, we can see this over here as our first option. Then our last resort for those buys will be that anything below that shall look at the deeper retracement to probably the demand levels all the way down here and see if they can be able to hold price and continue that correction on the US oil. So that's as far as the technicals I'm looking at going into this week. Yeah, basically that's what you can look at going into this week. So other than that, I'll just look at a few questions. Unless Rufus has something else to add on to you. Meanwhile, for the people in Uganda, we do have our first trade talk. This Saturday, this will come through. Let's talk about some strategies and focus on risk management, on how you can use it to counter your trading psychology. Nonetheless, we do have a lot of lessons from the beginner traders intermediate classes. So check the links that are in the bio for both online and physical classes from Uganda, Kenya, and Tanzania. We have you guys catered for. So other than that, unless Rufus has something else to add on, I can hand you guys back over to Rufus.
Thank you, Manuel. Thank you for the great presentation and technical analysis. So try to cover some questions in the comment section. Hello, Moneki, I can see you in the house. Gisharu, Naomi, thank you guys for joining. So there was a specific question on New Zealand. I believe you already covered this. So there is also a question from Wangari Patrick. So could Trump be setting US into a manufacturing superpower from the policies we see his administration advocate for and the almost international weakening of USD, tariffs and attack on Powell, or why is USD this week? So as I mentioned on my analysis on gold, we have seen the dollar weakening down 9% compared to other currencies. So main reason that this is happening is because of it's mainly because that investors are de-risking, and by de-risking it means that there's a lot of uncertainty that is currently happening in the markets, and these can be identified using the volatility index or the VIX. So when you follow the VIX and you see it up 100%, then it tells you that the expectation is that the market will be very volatile in the near future, which basically implies that there is a lot of uncertainty in the market. So when this happens, investors tend to shift from risk on to risk off. So risk off is when investors are not willing to take a big risk in the markets. So in this case, they sell equities, they sell bonds for the concerned country, in this case, the US, and they go for safe haven assets. And that explains the strong rally in gold. So it's more of investors running away from the risk in the US economy and waiting on the sidelines until things stabilize and then they come back. So that explains why the dollar index is weakening. So on the other hand, when it comes to manufacturing, this is not something that can be done in a day or a week or a month. Manufacturing takes time to set up investments and everything. So from what I'm seeing with the Trump tariffs, it's more of an art of the deal, trying to negotiate better trading terms between the US and other countries with a main focus on China. So in this case, I don't think he's trying to boost manufacturing in the US. Yes, it could be a long-term strategy, but so far as from what we are seeing in the markets, it's more like trying to negotiate deals, and we'll see from the very first deals we'll get, possibly in the month of May through to June. But for now, it seems more likely that the tug of war between US and China is still continuing, and all we can expect is more volatility in the markets, and as a result, more escape towards safe haven assets. So I'm still going through the questions. So a demonstration explaining how to modify a stop loss. So I have already done this. It's available on a course that is available on FX Pesa's YouTube. The course is called Novice to Pro. So scroll to the first episode, Introduction to Forex. I've done a very simple demonstration of how to modify your stop loss, entry, exits, and everything. So this other one, Trump threatened to fire Powell in relevance to this. Yes, I already talked about this earlier in the presentation, that on one side, Jerome Powell is considering holding rates higher for longer, mainly because the US has not yet achieved its central bank mandates. And the mandates are basically to maintain stable inflation, and stable prices means an inflation rate of around 2%. Inflation has been long higher than 2% for the last 3-4 years. And this has been a big problem. So in this case, they haven't yet achieved the 2% target, and unemployment is on the rise. So that explains why the Fed Chair Jerome Powell is still holding rates higher. So, while on one side, Jerome Powell has been holding rates higher for longer, uh, the US President Donald Trump is pushing for rate cuts, and he wants aggressive rate cuts. So far, Jerome Powell is not agreeing, and the Federal Reserve Bank of the US is an independent institution. So there is a tug of war between the two, and that has some relevance in the markets, in that whoever wins, there will be an impact in the markets. So if Trump is able to fire Powell, then he will achieve his goals of cutting rates. And if he can't fire Powell, then he will have to respect Powell's decision. And in that case, markets may have to remain higher for longer. So trying to go through other questions. So could the weakening of the USD be intentional by Trump's administration, or what could be the target that they seek to achieve? Also, the attack on Powell doesn't seem very smart. So yes, on the point of weakening of the USD, we know that Trump is basically MAGA, make America great again. So literally, from what he has done since inauguration, weakening the dollar by about 9% compared to a basket of other currencies, it means that the US goods have become cheaper by about 9%, depending on which currency you are using. So what this basically means is that there's more demand for US made products and services, and as a result, it is expected to boost the US economy. So clearly, it's something that Trump is working towards, and he hopes that this continues to work. So yes, this is very intentional. So what is happening to the dip in gold? Are there any news to that effect? No, it's just normal volatility. So gold moving by 500 pips a day used to be like big news, but from what we have been experiencing from the 2nd of April this year, 500 pips in gold seems like sideways movement. It's almost like gold is moving flat, because on average we have been getting 1,000 pips a day. So clearly, this is within normal expectations. After we had such a big move yesterday and this morning, then eventually we'll get pullback, especially from profit taking. So while we are getting a pullback, I expect that to be temporary. The long-term trend is still bullish. On the question of Tesla earnings, unfortunately, we'll not be able to cover this today, but hopefully you can do it on your own. So one thing we know is that on the last earnings by Tesla, they missed targets, and on the deliveries report, they also missed targets. Of course, they are losing the market share in China, with companies such as BYD getting a bigger market share in the electric vehicle market. So we'll be getting more updates on the earnings later in the day. So a good question. How can I get to meet you guys, please? I'm from Uganda. So hi, Manuel. What's the address to the office in the Uganda office, and when are you open?
Yeah, for Frank, Rumi Building on Lumumba Avenue. It's just opposite Finance Trust Bank and just before the French Embassy on the 7th floor. And we do have classes going through the week, physical classes from 3 p.m. to 5 p.m. So feel free to come through. We're open from 11 a.m. in the morning. You're free to come around.
Awesome. So on the last question here, if you don't mind inviting Thanos or Lemayan to Burish Banta podcast, we would be more than happy to do that. So kindly inbox me on Twitter at RufusKE. If you have their contacts, I would be more than happy to contact them, and then we see what we can do. Other than that, what I would like to end today's presentation with is our latest episode of the Bullish Banter podcast. This one was conducted in Uganda, Museveni's territory. Here we had an interview with a trader called Stuart FX, the flipper. So it's a very interesting story about his journey and how he approaches the markets. So make sure to check it out on FX Pesa YouTube as well as all other podcast platforms. So if you don't have an account yet, make sure to check the links in the description below. Register for a trading account. If you're watching this on X, make sure to visit at FXPesa_official. That's our official handle. And from there, the link in bio will direct you to register for a trading account. And on top of that, if you're just beginning your trading journey, make sure to check out the Novice to Pro course available on FX Pesa YouTube, which will help you skip from a beginner, get to an intermediate level trader, and with practice, you eventually become a pro level trader. So that's it for the day. Thank you guys. I hope you had an enjoyable Easter. So hopefully we get a very profitable week. So thank you all and enjoy your day.